Very good morning, ladies and gentlemen. Hope you all are doing well. Today's topic is defend or deploy, and what is a smart portfolio, which is before the FOMC's meeting on September 17th. So today I'm going to cover, multiple things. Number one, speak about the equity and crypto market of last week, as well as some of the opportunities that we have on the table, and give you a very high level understanding of what defend or deploy means in connection to this week's uh, market situation, as well as what we expect to happen after September 17th FOMC meeting. So overall, we saw a great week. Equity markets did extremely well. As you can see, all green uh, handles here, beautiful bars, trending upwards. The S&P gained about 1.6% and Nasdaq gained about 1.9%. And on the crypto side, Bitcoin did a spectacular gain of about 5% plus, and gold was up 0.7%. So overall, equities, cryptos, and commodities all did extremely well last week. On the jobs front, jobs data continue to weaken. The initial jobless claims are at the 4-year highs, and the reasoning for why the jobless claims are high, we'll talk about it in the coming slides. And inflation, we got the PPI, which is producer price index, and CPI, which is the consumer price index numbers last week, and we saw an uptick in inflation, but we'll talk about what are the reasons behind that uptick and why is the market continuing to trend upwards despite the fact that the job market is extremely trying to weaken, as well as the inflation is showing a pickup in numbers. The markets are at this point pricing in 3 cuts for 2025 and 3 cuts in 2026. We had great earnings during the week. Oracle was the number one catalyst for a big upside on Thursday. The numbers were not that great, but there was a big news from Oracle, which is a contract from OpenAI for $300 billion, which spiked up the growth of the company. And Larry Ellison, the CEO, became one of the richest persons, in the United States. He added almost $80 billion to his net worth and became the richest person in the US, with the upward move of Oracle that we saw last week. US equities continue to rally, and the other good thing is the equal weighted S&P 500 also rallied. It broke up, and we saw small caps as well as mid caps participating in the rally. So overall, a spectacular week. Green candles everywhere, whether it's S&P 500, tech heavy, Nasdaq 100, Bitcoin, gold, small caps, all the indexes did extremely well. So it was a very good week, and let's talk about why it happened and what might happen next week. Next slide, please. Okay, coming to inflation, the CPI numbers rose 0.34% month on month, and this was mainly driven because of shelter, which is about 44.2% rise, and the total weight of shelter in the total CPI calculation, which you can see on the left hand side of the screen. Shelter is a big weight in the CPI numbers, so shelter went up. And secondly, the pricing of vehicles, used and new vehicles, or the automobile sector, that went up as well. So both put together, we saw uptick in CPI. But one good thing is, the cause for this uptick is not the tariff, which is what was the concern, of the federal government with respect to rate cuts. So Fed Chair Jerome Powell was concerned that this tariff, which is implemented by President Donald Trump, is going to impact the inflation of United States. But as of today, it looks like the reason for the uptick in CPI is primarily because of domestic reasons and not the imported goods that we saw coming in the US, which actually added a significant amount of money to the kitty, to the treasury, close to about um, $80 billion got added. And by end of this year, Treasury Secretary Scott Bessent expects that number to reach close to $1 trillion. So US is really collecting a lot of money because of tariffs, and President Donald J. Trump's plan of charging tariff to the world and balancing the budget looks like is going to continue. And we have a very important, decision pending from the Supreme Court, where it will be decided whether, tariff levied on other countries is legal from the office of the White House and President's office. That decision, I think, will take place by end of this year. And by that time, I think we would have collected close to $1 trillion. And Treasury Secretary Scott Bessent feels that US is going to have a huge problem if the Supreme Court, you know, considers this tariff to be illegal and it has to be returned. But overall, when you look at the number of votes for and against at the Supreme Court level judges, it looks like this is nothing to do with overturning this law, and this law will continue, and US will continue to have tariff on all the countries with a minimum of 15%. And with some of the countries like India and Switzerland, the tariff is going to be much higher, which is going to generate a lot of revenue to this country. And with the CPI numbers that we saw last week, the indication is very clear that the reasons for uptick was not imports or the tariff, but primarily due to domestic reasons such as shelter and autos. Next slide, please. So coming to the job market, we saw a weakening job market, and that's not very good for the economy. But right now, market is celebrating it because weaker job market means more interest rate cuts. We saw the jobless claims reach the highest numbers that we saw in 2021, and that's not a very good news. But if there is interest rate cuts, most of the companies which are today suffering because of high rate of interest by the Fed, there will be further, spending because banks will be more easy on making loans. Companies will be taking more loans, and that will spike up the businesses of small caps, mid caps, and the large caps. And whenever there is an interest rate cut, we always will see, increase in the price of commodities such as gold, silver, and Bitcoin. So overall, interest rate cuts are great for now, and the market is today factoring in 2.9 cut, almost 3 cuts for the year 2025, and additional 3 cuts for 2026. So job market weakening was celebrated by the stock markets because markets are always forward looking. Doesn't mean it's good news for the economy, but when markets are trying to figure out what kind of valuation they have to give to companies, the valuation depends on futuristic growth of the earnings of these companies. And as a result of that, we saw small cap, mid cap, and all other indices do extremely well last week. Next slide, please. Next slide, Jyoti.
Yeah, it is loading, sir.
Okay. Okay. So coming to what should we be doing with our portfolio? Should we be defending our portfolio, or should we be deploying more, in this market condition? What should we be doing? That's a question everybody is now started to think. Are we in a overvalued market? Should we be moving some money into cash? Should we be hedging our portfolio with certain hedging instruments such as gold, bonds, or value companies? Or should we be, putting more money in same growth stocks, the max 7 companies? If you look at these numbers on the left-hand side, this shows that Goldman Sachs is forecasting S&P 500, the estimates of earnings, which subsequently will determine the S&P's overall number. The 12-month EPS, which is mid of 2025 and end of 2026, we expect the index to touch 6,900. But as I said, equity markets are always forward-looking. The current valuation that we are seeing of almost 6,500 points on S&P 500 is kind of overvalued. And in my personal opinion, after this rate cut on September 17th, we may see slight consolidation or slight correction in most of the companies and the index. And this correction could be in the tune of anywhere between 3% to 8%. And when this happens, there will be panic, there will be fear. But whatever has gone up so much has to come down. It's a sign of a healthy market. And looking at the EPS, or the earning per share growth of all these companies, S&P 500 companies, we are very confident that by the end of year 2025, we may see a 6,800 to 7,000 points on S&P 500. So we are very bullish about this equity market at this time, crypto markets as well as small caps. But one has to be careful in terms of deploying new money, because we should always invest money in the market when the market is low, and you have to hold it for some time. And if you want to exit, you have to exit when the markets are higher, so you can make a capital gain. So in terms of hedging, it is a good idea to include hedged instruments such as gold, bonds, and value stocks, because growth stocks will stand to correct whenever there is a correction. And because the value stocks has been lagging, that is the 400 plus stocks of S&P 500 has been not getting the same level of importance as the 7 big technology stocks, we may see the uptick in gold, bonds, and value stocks. And where to deploy money? If you are not in small caps, if you're not in some of the altcoins, I think this may be the time to put some money into small caps such as regional banking, biotech, and other sectors which are part of Russell 2000, as well as investing in altcoins on the crypto side, because we are seeing the Bitcoin dominance come down, which means we will see an uptick in some of the altcoins as interest rate cut happens. The altcoin season kind of looked like it started, but it kind of faded away. But post September 17th, if Fed is dovish, which means Fed is positive about the interest rate cuts for 2025 and 2026, we may see a very positive market, but after a short correction, because when the market goes up so high, traders do tend to take some profits off the table, and that can send a downward spiral to the equity markets and cause a little bit of downside to companies as well as to the indices. So a balanced exposure is very important. And if you look at our portfolio composition, we are super balanced. Most of our custom models are in international, domestic, metals and cryptos, next generation innovative technology companies, as well as small and mid caps. So balanced portfolio is super important in this environment, because money cannot just come out of the market, it has to move within the market. and we see that happening in the last few months. And I think post September 17th, we may see some money off the risk assets, which is all the technology companies and the Max 7 companies, and money flowing into gold, small caps, value stocks, and cryptos. Overall, market fundamentals remain strong. S&P 500 earnings are projected to grow by 9% for 2025 and 14% for 2026. So overall, having exposure to equity is the best thing to be in at this point of time. Plus add to it risk on assets such as cryptos and some hedged instruments such as gold, silver, and other commodities. Next slide, please. So next week we have the retail sales, which sends a message about the consumer sentiment. We expect it to be around 0.3%. I think the retail sales are going to come in line with the numbers as forecasted. The big one is on September 17th, which I have been talking about. Fed Chair Powell is going to come in front of the mic and going to speak about his mind about interest rate cut. Markets are expecting 25 basis point cut. If a 50 basis point cut happens, which brings the interest rate to 4%, that is going to be hugely celebrated by the equity markets. But for any reason, if the Fed hints either 25 basis point cut or no cut, market will either remain where it is or market may nosedive. In my expectation, we may see a 50 basis point cut, but a 25 basis point cut is 100% guaranteed. And on the jobless claims, 263,000 number is what is expected, and we will see the numbers on September 18th. But I think once the interest rate cut happens, after that, whatever happens to the jobless claims that week, may not be very relevant to the market. Next slide, please. Our equity portfolios did extremely well. If you look at the custom models on the right hand slide, most of our models actually overperformed the S&P 500's weekly numbers. And the margin model is today at around close to 17% year to date, while S&P 500 is 12.8%. And even our custom model is around 13.5%, while S&P is almost 12.84. So the numbers on our equity models are looking beautiful. So if you are looking to put more money in the market, please talk to us, because we have a model which is a risk-adjusted return of 6% and a slight growth. But then as and when market corrects, we'll end up putting more money in either the custom models or the individual stock models for you, so that you can really benefit from the good equity markets that we are in, with solid companies performing very well because of AI, as well as all the good things that are happening to this economy because of interest rate cuts, as well as the budget deficits coming down because of the revenue from tariff. So overall, a great week, guys, and we expect next week to be a little sidewards movement or a choppy week because of the news of interest rate cut coming to the forefront. So September 17th may be a celebrated day. 18th onwards we may see a slight correction to the equity markets, and that correction is actually healthy, because we want markets to correct, because it cannot be always an upside market. We have to see slight side consolidation market, and then the upside should take place. That is a very healthy sign for the equity markets. Next slide, please. So coming to structured notes, we have some excellent structured note. This one is something that I really like. This is a note on Palantir, Coinbase, and Nvidia. And this note is trading on September 30th. So we have time for this note to be traded. I am personally putting a lot of money in this note because the way this note works is if all the three stocks are flat or positive, then you will end up getting 55% at the end of year one, and the bank will return the money. If it is not up, if one or more stocks are not up, then it goes to year three, and at the end of year three, you get 3 times the return of the lowest performing stock. So if Palantir happens to be the lowest performing stock out of the three, then you get 3 times the returns of Palantir. So if the Palantir is up by 100%, you get 300%. And we don't know what would be the growth of these three companies, but we know for sure that these three companies are solid companies. All the three companies are in S&P 500. They are large cap stocks. And all of these three companies are very well focused on AI, and each one of them is a leader in their own space in terms of AI as well as tokenization. And the other feature that we have included in this is if the lowest performing stock is down between 1 and 50%, then you end up getting the returns of the down percentage. Meaning if, let's say, Palantir is down by 30%, then you'll get 30%. So if the market is flat or positive, you get a return of 3x of the lowest performing stock. If it is below, and if it is below 1 to 50%, then you get that percentage as the return. If it is below 50%, that's when you start losing money. So it's a beautiful note. It has multiple levels of benefits and 50% barrier protection. And this is issued by BNP Paribas. So please talk to us if you're interested. And these notes are very liquid. In case you want to exit out of this note at any point of time, all you have to do is tell us to exit. Or if we think it's the time to exit this note because the future is bleak, or if there are better opportunities at that point of time, we will ourselves recommend that we exit out of this note. So it's a liquid note, great companies, upside at the end of year one, at the end of year three, upside for downside up to 50%, and the real downside comes when it is below 50%. So this can be a little confusing because these notes have to be understood for the first time, and once you understand it, it becomes very easy. And all you have to do is you have to tell us how much money you want to put in. No need to get concerned about how much to put in. Depending on your net worth, you can put in anywhere between 3 to 8% of your net worth in each note, because these notes are protected with a large bank and has very good upside if the market continues to have its uptrend in the next 3 years. Next slide, please. So this is an income note, and this is on the ticker Palantir. Palantir is an excellent stock. It's doing very well because of its presence in artificial intelligence as well as in the government sector. Most of the companies in the world are trying to give business to them because of their intellectual property software that they have implemented. And this note is also from BNP, and it is getting traded on 17th September. So we don't have a whole lot of time. And this note has a return of 20.8% per year. And this is paid on a monthly basis. So 20.8 divided by 12 is what you get paid on a monthly basis. This note does not have memory feature in it. And it is a note which can be called within 3 months by the bank. That means if bank ends up returning money after 3 months, we'll have to find another opportunity after 3 months. But for 3 months, you'll make that 1.8-ish type of return. Great company, good return, 20.8% is a very good yield. It has a 50% barrier on the downside, and it's an 18-month note. It's not a very, very long-term note. It's a 18-month note. So if you're looking to generate income of your money, then this is a good place to put your money in. Next slide, please. So the third note is with the NVIDIA, Palantir, and Tesla. The reason why we have all tech companies here is because tech is what is doing well, AI is doing well. And this is also an income note with 17.75% per year. And the beauty of this note is it has something called as 1-star feature. That means at the end of year 3, if one stock is positive of the 3 stocks, then you get all your money back. And it has a memory feature as well. So this is a very good note, but because of the 2 features that we have added, the returns are slightly on the lower side. It's 17.75%, but certainly far higher yield than what you would get from your saving account or by putting money in treasuries, which is around 4%. The yield on this is 17.75%. So this is a good investment opportunity if you're looking for income. And we can talk to you about how much money to put into these notes, looking at your risk tolerance and your need for income versus growth. Next slide, please. And all of this information is on our website. You can go to our website, mytimeequity.com, and then go to structured notes. You will find all the information there. This slide shows the opportunity to invest in XAI, which is Elon Musk's company, and perplexity.com, which is an alternative to ChatGPT, Arvind Swami's company. We are fully subscribed on XAI, but if you are interested in investing in Perplexity, we have shares of this company. You can write to us, or you can copy this link, which is at the end of this slide, which will also paste in the group. You can click on that and follow the steps to make an investment in Perplexity. So this full investment will end most probably in a week from now. But if you're interested in any of these 2 companies, express your interest. XAI is almost done or mostly done. But if you express interest, we will know if you want to buy more shares on the market and add it to our special purpose vehicle that we have launched. Next slide, please. So the car wash opportunity, we have this opportunity from Mr. Car Wash. This is an opportunity to lower your tax, get an income of around 4% per year, and also get growth when we sell the property. This property is from Misters. It's a listed company, and we are buying a car wash from a listed company. And most probably this investment opportunity is almost done. And the reason I'm showing it to you here is if you are interested in this kind of an opportunity, please let us know and we can look for the next car wash to purchase. But the benefit of investing in car wash is you get almost 2 times of your investment as write-off from your income tax return. So that helps you save taxes and you get income. So on something which you have written off and you're technically not paying anything. So instead of paying IRS, you are investing in this car wash and not paying anything to IRS. So that's basically free investment to you. A free investment generating 4% return or 4.5% return amounts to about 24% return, because you are really not putting your money, you're putting in the tax that you should have paid to the IRS. And 3, when we sell this property, we will be able to get a gain out of this property. So beautiful opportunity. Write to wealth@mytimeequity.com if you're interested in such opportunities, and we can help you there. Next slide, please. We are coming up with an investment opportunity in Kansas City. It's a build to rent townhome community. It's about 40 homes that we are purchasing. Beautiful property, all occupied, and we are buying this property where it is generating about 8% cap rate. So we are going to showcase more information to you in the coming weeks. Right now it's in the due diligence process, and we should be closing this property by end of the year. It's totally about $6 million worth property and almost $4 million is committed. The rest of it might be available, and we will let you know about this as soon as we can. Next slide, please. So that brings us to the end of this session, folks. Please join our WhatsApp group if you have already not joined it. We keep posting information about our crypto fund. I think that's something that you should put some money in because cryptos are doing real good. In fact, I just posted a message in our WhatsApp group. So please click on that link, visit the site, understand what we are trying to do, ask us questions. If you have questions on structured notes that we presented, talk to us. Please do refer us your friends, family, colleagues, and we will be happy to take care of them as well. If your CPA or other advisors are not able to understand or offer some of these instruments, connect them to us and we can talk to them and we can help them understand so they can help you with filing your tax returns with the investments that you're investing with us. So there are a lot of ways to work together, folks. So please talk to us and we would love to work with you. There are other opportunities as well, such as life insurance, annuities, exchange funds for highly concentrated stocks. So if you're holding stock options of NVIDIA, Meta, Google, Texas Instruments, we can help you, lower the risk of holding one stock. So you have diversification in your portfolio. If you're sitting on a lot of equities and there is capital gain and you want to figure out how to lower the taxes, by selling and not paying taxes, how to achieve diversification on those stocks, how to generate some income from those long-term stocks. We can help you with anything and everything that is required in the world of finance. So please reach out to us and we'll be happy to take care of you. I would request Jyoti to take it on from here. Thank you.
Thank you, Sudhir. So, as I already informed, Sudhir and Anup are away and they have to reach an event. So that is why we are not taking the Q&A section today. So if you have any questions, please do type them in Q&A section or write to us on wealth@mytimeequity.com or call us at 972-330-2771 and we'll be able to help them with the query. Thank you. Thank you for attending the webinar. Have a good day. Thank you. Bye-bye.